Hello everybody, it's Yashar here, back again with another video. And in this video, I'm going to go over the latest earnings report of Killam Apartment REIT and update the valuation of this REIT based on my 6 REIT indicators. I think I'm the only one on the internet and especially YouTube that talk about this Canadian REIT, and in my opinion, it is one of those hidden gems in Canadian market. I personally own Killam Apartment REIT in my stocks portfolio, and it is one of those positions that I'm going to increase my stake in the next couple of weeks. For those of you who are not familiar with this company, Killam is the largest real estate investment trust in the Atlantic region of Canada with a focus on residential buildings and with a company HQ located at Halifax, Nova Scotia. They own and manage multiple properties in Nova Scotia, PEI, Newfoundland, and New Brunswick, and have a large exposure to real estate market in this area of the country where the price of real estate and land exponentially increased in the last 4 years, especially in Nova Scotia and Halifax. And this upward trend in prices is predicted to continue in Nova Scotia for foreseeable future. You may ask, why is that? And the reason is exponential immigration to Atlantic region of Canada and particularly Halifax in the last few years. Killam recently reported a new earnings, and in this video I will break down the earnings of this REIT and then I will go over the 6 REIT indicators for this stock. I should say I think this was a good earnings report by Killam, nothing extraordinary, but all the numbers were pretty much in line with the expectations. Philip Fraser, the CEO of Killam, started this report with these sentences. Killam achieved strong operating and financial performance for the 2022 year. The unprecedented demand for the apartments, growing interest in seasonal resorts, and strong leasing in our commercial business resulted in 4.7% overall same property net operating income growth in 2022. Okay, now let's look at the key numbers in this report. Adjusted funds from operation, or AFFO, per unit was up 4.5% this quarter and 3.3% for the year, which is in line with the expectations of 3 to 5% growth in adjusted funds from operation. Same property occupancy is up to 98.7%. They pretty much don't have any empty unit at this point. I think this was a record number in the history of Killam REIT. Same property revenue growth was 4.4% this quarter and 5% year over year, and same property net operating income was up 4.1% for this quarter and 4.7% year over year. As you can see, their payout ratio is also very conservative at 75% of adjusted FFO, which means we should expect a distribution hike in the next few quarters after the management makes sure that they can potentially cover more interest hikes. CEO of Killam particularly mentioned that the company is going to be more conservative with capital during this high interest rate environment. These are his words. Killam slowed acquisition activity during the second half of the year following rising interest rates and focused on maintaining capital flexibility, which is absolutely makes sense and is a good move by the management in this environment. If we look at their debt matrix, their debt to asset ratio is at 45%. This is not amazing, but is totally normal for a REIT, which operates based on loans and mortgages. Their average mortgage rate is up to 2.74%. It's still very good average interest rate, and their average years to debt maturity is 3.8 years right now, which is a little bit concerning if the high interest rate environment continue to exist for longer periods of time. But it's probably fine, as most economists basically predict a rate cut in 2024. If we want to see how they actually performed against their previous guidance, we can see that they basically beat or meet their previous estimates in 2022. They beat the same property net operating income targets. They were able to diversify their portfolio by new acquisitions, especially outside Atlantic Canada. They continue to develop new buildings, and their balance sheet is still in a good shape overall, despite the high interest rate environment, which is extremely difficult to navigate for REITs. Overall, I'm happy with this report. Okay, so now it's time to see if Killam can pass my 6 REIT indicators after the recent earnings report. If you want to know how to evaluate a REIT properly using these 6 indicators, you can watch my previous video on Canadian REITs, Canadian REIT valuations, and which I will leave a link to that video in the description box below. The first REIT indicator is adjusted FFO, or adjusted funds from operation. In the last 5 years, Killam adjusted fund from operation increased by 13.7% year over year. Their price to FFO is currently close to 20.3, while their 5-year average price to FFO is close to 21.2, and their sector average is 23.2. So it seems Killam right now has a relatively good valuation in terms of adjusted funds from operation. Now to the second indicator. Killam has a net asset value of approximately $2.11 billion Canadian dollar, and its market cap is close to 2.2 billion Canadian dollar, which means it is fairly valued in terms of the second indicator. Now, the third indicator, which is share dilution rate. Killam dilute unit holders, but what is important is the ratio between cash flow generation and share dilution, which can be found via adjusted funds from operation divided by share, basically AFFO per share growth ratio. And it seems Killam was able to grow its AFFO per share by 5.2% in the last 5 years, which means while they diluting unit holders, the rate of increasing cash flow was significantly faster than dilution. The next indicator was their debt to asset ratio, which is around 45%. And I would say it's not the best level in the world, but it is totally normal for a REIT. Next indicator is the distribution history. Killam increased its distribution consistently over the last few years. In the last 5 years, they increased their monthly distribution by around 3% year over year, which is a good growth number. Last indicator was payout ratio, and for Killam, it is around 75%, which is very good. It means they can use almost 25% of their cash flow from operations to invest in themselves, acquire new properties, and continue to grow in the future. Finally, let's quickly look at my personal discounted future FFO model. According to my model, if we expect 10% return year over year in the next 10 years, the fair value of Killam stock is around $18.3, which means compared to current share price of almost $18.9, the Killam shares are traded close to their fair value. As you can see here, Killam passed 4 out of 4 quality indicator, and it is fairly valued according to the valuation indicators and discounted future FFO model. I think Killam is still a good buy here, but may not be an amazing undervalued stock like it was a few months ago. There you are, guys. I hope you enjoyed the video, and if you enjoyed the video and my coverage of earnings report of Canadian companies, consider subscribing to the channel to see similar videos. I will wait for other Canadian companies earnings reports to hopefully cover those as well, but until that time, I see you guys in the next video. Farewell.